So joining us now is Tony Greer. Happy New Year, Tony.
Hey, Patrick, Happy New Year to you, man. How's it going?
It's going great. So those of our listeners not familiar with Tony, which you should be, but from the TG Macro, and we have his regular segment called the Navigator launch. And well, Tony, we it's the new year. The markets are buzzing here, and we got to get you online here and share your thoughts as what's going on. What's your take on all of this?
Yeah, well, I'm happy to share, Patrick. I think my take on this is going to be about respecting the dip in the dollar that's taking place. I feel like in 2018, 2019 were just up, up, up years for the dollar, and they couldn't break down. It feels like this year we're seeing a little bit of strength out of Europe, and then that's just happened recently. We've seen the Europe and the euro and a couple of other currencies trying to turn up against the dollar, and I really want to respect that because those currencies include, everything from the euro to the pound. With the Brexit scenario, the Aussie dollar has tried to turn up a couple of times here. At least it's leveled off against the dollar. So I want to respect those other currencies at this time. And it doesn't make me a dollar bear. It just, as a framework, I want to use a dollar pullback scenario as my framework because I think it feeds into a little bit of headline inflation hitting the tape. It feeds into having a strong euro and that propelling potentially the commodity index higher, which is part of my base case scenario that I
Right.
think could occur this year finally. Because look around, Patrick. This it's a liquidity game right now. The commodities are starting to perk up. Gold is rallying clearly, oil is rallying. For a number of different reasons, we could say it could be rallying, but oil's been firm as well, and so I'm going to look for a little bit of inflation here in the U.S. A little bit higher rates led by Europe. And I think the 10-year is a sale. I think 10-year
Yeah.
treasuries are a sale. I
S-
feel like yields
So
should, we're going to have some time above 2% coming up here. What do you think? Sorry.
Yeah. Well, no, I was just going to ask you, one of the big things we talked about, we made our little 2020 bold forecasts in our last episode, and clearly mine wasn't bold enough by what many of our listeners were saying. But one of the things that was a part of my narrative was the fact that I didn't think that this reflation impulse that you're referencing here was going to last much more than maybe the first quarter, like somewhere in the first half, we're going to have a flip. I mean, you're not a big dollar bear. You made it clear. So, are you in that same camp? Do you think that we're going to get a little bit of inflation here, but this is not the big one. This is not the big turn in
No,
your mind, is it?
No, no, I don't. No, I don't think so. I mean, I still think we could stay long gold within that conversation, but I think no, I don't think it's a big dollar turn either. I think it's just, it's time for the other currencies to get some attention. Literally, it's been a strong dollar environment for 2 years now, and at least they're starting to see some signs of a turn up in German industrial activity, and then just
Yeah.
literally this week, and things like that, and so that's helping their rates break out a little bit. I feel like if you see, German bonds go into, at least yielding zero or a positive yield or something like that, that there'll be some flow into Europe, and there'll be some flow into the stock market. Because it'll just look like a healthier market, and I think that could propel the euro, which could then therefore propel commodities, or at least be a tailwind for commodities this year.
Right. Right. And so here we have that 10-year Bund yield, which is at minus 20 basis points right now, right?
It's an
Are you
interesting level,
looking?
right, Patrick? It's a
Yeah. It,
2016 low.
Yeah, it is. And what is interesting, so you're thinking more like this 2016-17 scenario, which is that, just for like a year, the yields
Yeah.
just kept rising a little bit. I mean, do you think there's going to be sustained higher interest rates in Europe, or is this just a reaction from an incredibly crazy drop in yields throughout 2019?
Yeah, well, I'm not. I wish I could be an expert in what I think is going to happen in Europe. I try to just react to what is happening, but I will say that I've been impressed with at least some of the data has held in there. If you look at the European economics city economic surprises index for Europe,
Yeah.
it's gone from like minus 80 to plus 40 because their data has been beating on such a consistent basis. So that's just at least something to take into account. And if we see some leadership there, at least you'll see some money flow, and that should be relative relevant or at least obvious in the FX markets. I just get excited about that Bund yield chart because, we've had this breakout above all the moving averages. We're starting to see the 50-day cut up through the 200-day now. And that generally is a, bullish signal going forward. So, if we get back above this minus 20 basis point rate, then I think that, you'll see the treasuries and sovereigns around the world start to back off. We can make a case that we
Yeah.
were, Kevin was saying, that we were in a bond bubble last summer, with that
Right.
humongous pool of negative yields. And, literally the bond market went up every day. And that was, in fact, a bubble that I think we're rejecting. So we'll know soon enough.
Right. And so, what's your thoughts on the 10-year yield then?
Well, I think everybody here in the U.S., I think the part of the reason, put it this way, this has relation to the stock market. Part of the stock market rally is obviously because of the liquidity pump going on at the Fed, right? But if you look at positioning going into the sort of last quarter of this year, portfolio managers were really expecting a recession, right? The curve,
Yeah.
the yield curve had just been inverted. The alarm was sounding. We talked about it on the show where the yield curve was made the cover of Drudge magazine, Drudge Report website. And I was like, if that's not a signal that this might be the bottom of of yields and the bottom of the curve
Yeah.
inversion, then I don't know what is. And so we've migrated out of that. I'm not going to say that it's never going to go back there, but the way the data has been going in support of higher rates, I still feel like the bond market is behind, and should have sold off even more, given where we're going. So, with the economy, I mean, and I think that the economy is just sideways to steady. There's no real emergency to talk about in terms of the U.S. economy, other than it's in pretty good shape.
Right. So the interesting part about you were mentioning the yield curve, and I'm just pulling up a chart right here.
Yeah,
This is the 2s10s,
yeah, perfect.
and obviously we've had a little bit of a steepening, obviously since July. I put a weekly chart, so this is going like a 5-year time frame.
Yep.
Now, what I've heard many people say is that forget the flattener, it's about when it starts to steepen that actually is the recession signal. That's when the scary things happen. Now, but there's numerous times though when it just starts to steepen a little bit. Just it could be like a bit of a bear steepening, especially like you were talking about here on the 10-year.
Yeah.
But it doesn't end up being the big one.
No, but
And so the question here is, do you think that we're heading right back down to the zero line on this, or what's your intuition how this could potentially start to play out here?
Well, my idea on how it starts to play out has to do with the fact that the recession, I don't believe the recession is coming anytime soon. At least I can't find any concrete evidence of it. So if I don't
Yeah.
believe that, then I feel like that, I also proved in my note that, the yield curve was inverted for the shortest period of time preceding any prior recession ever. So, their
Right.
yield curve was inverted for a number, I don't know, it was a number of days you could count on. I don't know, it was 50 days or 35 days or something like that. Whereas in prior recessions, the yield curve was inverted for like 9 months, or 6 months period of time. So that at least during that period of time, you already started seeing the data start to turn, and then you would have the yield curve go higher and then bad data come out. But we haven't seen the bad
Yeah.
data at all yet. We've only seen this crazy, snap into negative territory in the yield curve, which could be explainable by a number of different things going on in the treasury market. I mean, God, what's been going on with QE and then at the repo window? Who can really eloquently explain everything that's going on in the treasury market right now? I don't know anybody.
Right. Right. You know what's interesting though about the that yield curve and the steepening. I wanted to go back to 2006 and 7,
Mm,
and what was interesting is that if you look here on the chart, it was actually all the way back in 2005, at the tail end of 2005 into the start of 2006, that the first part of the inversion happened, and for almost an entire year through 2006, including one false start up here,
hmm
the yield curve stayed inverted or down at the bottom end, and so it's hard to make a signal out of it. I mean, it took almost 18 months
Yeah.
for the real steepening to kick in. And this is the interesting part is that while we've seen us come off from an inverted curve, what if this doesn't even start to steepen until 2021?
Oh man.
Right? right? Like there's to me it's like it's not a tradable pattern on the very short term,
No, I agree with that.
right?
It's really not. It's really not. I'm not, luckily the curve is not an instrument that I'm out there trading actively. It's just something to keep an eye on.
Right. All right. So listen, I want to move on because
Sure.
whole bunch of our listeners, I'm sure, are dying to find out what you think is what's going on here in the stock markets. And I mean, here I'm going to pull up the S&P 500, but we've obviously had a pretty hot market since October. This S&P's been ripping for just north of 3,000 all the way to just barely to it's approaching 3,300 slowly.
Yeah.
And that's a pretty solid 10% rise. And
Yeah.
so, what's your take here? I mean, does this thing still have a little more to go, or are you starting to get a little skeptical here?
Well, I put it this way. I played the breakout through 30-30, right? You can tell right there, going back to sort of November, December. That's really when I got on board, right? That saying through 30-30, the market can run here. I thought it would go to roughly 32.50, and I'm on the tape saying that, so I don't feel bad, like I'm making this up. So now that we've gotten here, and we've got an event on the tape between the United States and Iran, I have taken a lot of chips off the table aside from my aside from my energy stocks. But I feel
Right.
like the only, put it this way, we just lived through this, potential Middle Eastern conflict situation, and it was barely a hiccup because the Fed is providing so much liquidity at the repo window and basically in as much as is necessary. And so that money keeps finding its way into the stock market. So while I can stay bullish within a secular trend, and I can say, I wouldn't buy new longs really up here on this extension. If the Fed is going to keep the liquidity pumping at the repo window, I'm certainly not going to short the S&P for a trade. That's all I'm saying.
Right.
So
Right.
I can't pick a number and where it stops. Overbought stays overbought. And it still looks like we're in that kind of a scenario. And so right now, I'm literally trying to be as patient as I can because it doesn't seem like making new purchases up here on stocks that are at least making new highs is a good idea. So I'm going to
All
sort of
right.
let this play out and see what happens.
All right, so Tony, let's talk some individual stock names. Is there something that you're watching? What's on your mind here?
Yeah, I mean, like I said, I like the energy stocks. I love the fact that there are some sentiment bombs out there, Patrick, right? There are some things
Yeah.
where, like in Europe, they want to stop lending to the fossil fuel companies, right? And that's just like, that sounds insane to me. Over here, you have
Yeah.
Chevron writing down massive numbers of shale assets, natural gas assets. And I feel like that's sort of, this is, at this point, with the way the stocks have reacted, that's kind of throwing the baby out with the bathwater. These write downs
Yeah.
down at these levels. So I'm not saying that it's definitely going to hold. I don't have a crystal ball, but I like the way that for the last half of 2019, it seems like energy stocks went down every day, except they never made a new low.
Right.
So that was interesting to me, where it seemed
They've been
like,
bled out.
yeah, it seems like they're
They were
just
bled
dry
out. Like
heaving. Yeah.
what's interesting, there was a stat out there. I didn't do the calculation myself, but something like the entire S&P 500 energy component has the same market capitalization as Apple.
Exactly.
Now, it's just it's been slaughtered, right?
Yeah,
And
signals like that are just, for me, I have to put some money in the market when a sector is
so
that hated and I can't
so
get
so
paired for
that's
it.
so that's a value proposition, right? Like that to buy a cheap asset. But
Yeah.
do you think technically we're here where like in the first or second quarter of the year that there's going to be some tailwind here that could see these things have a legitimate pop? Like what's your kind of technical
Well,
take? And is there a particular name you're watching?
technically, well, yeah, like of the individual names, I like the potential bottoming action in Oxy down here in Occidental
Yeah.
Petroleum. I mean, that stock is off from
I'm
$90.
long it, so that's fine by me.
Oh, okay, good. Well, it's just making all the right moves now. It's finally crossed both moving averages, the 50 and the 100-day, and it's on its way to the 200-day. And sort of, that's a stock that I have as a sort of Texas hedge to my XOP. And I'm hoping that both of
Yeah.
them can get above their 200-day moving average, and I can add for a little bit because I could
Yeah.
see a scenario even where if the stock market backed off, that maybe energy stocks might not get beaten up that badly. It seems like if they're going to come for the
Well,
stock market, they would come for technology and semiconductors and social media, which has just been flying in the last
yeah,
couple of weeks. So, that's just a gut idea. I don't have any evidence to prove it, but I don't mind staying long
yeah,
energy
yeah.
stocks through this.
All right. What's your thoughts on the way things have been developing in those canopy stocks, or not canopy,
Oh,
the cannabis stocks, like Canopy Growth?
well, yeah, they've been disappointing, and I'm trying to stay on the storyline. I'm impressed with the way Canopy Growth has similarly been bottoming for the last 3 to 6 months. We had that spike low down below 15, I guess, sometime last fall, and the stock has
Looks
really been
looks a little bit like an inverted Head and Shoulders, almost like a little
yeah,
bottoming formation,
yeah,
doesn't it?
exactly.
But it hasn't broken out.
No, it hasn't
Hasn't
broken
broken
out
out.
yet to the upside, but at least it's holding this level. I want to be positive. I thought there would have been a bigger short covering rally from the Mario Cuomo announcement that New York is going to legalize within the next year, but there was no such luck with that. I think everybody maybe was expecting that,
Yeah.
and so there was a non-reaction. So I don't really have a great answer, Patrick, for why they're sideways. I really haven't fully engaged in that sector at all since I stopped out of everything. And that was the sort of
Right.
thank God I stopped out of everything kind of deal. And yeah, you sit there and wait. And usually, once you make the sale, you're even more hesitant to get back in again. Because you're not sure if the
Right.
bleeding is over. So I'm literally, it's hard to keep your hand on the trigger, trying to get in when you're being really, really cautious in the sector. So I don't know. It seems like we've
All
got a
right.
supply issue in the cannabis. So we'll find out soon.
All right. Well, Tony, listen, if anyone wants to find you and learn more about you or follow your Morning Navigator, where can they find you? Give me
Yeah,
the
you can,
coordinates.
sure, man. You can sign up for a free trial of the Morning Navigator at tgmacro.com, right on my homepage. You can find me on Twitter at tgmacro, or you can send me an email at tony@tgmacro.com, and I'll get back to you as quick as I can.
All right. Well, Tony, thanks for the update, buddy, and look forward to having you back on next month.
Patrick, you're the best. Thanks for having me, man.
All right. Cheers.
Cheers, bro.